Good morning, traders. Welcome to today's market review. This is Frederick Zach at CMTrading. Today is December 28th, 2018, and today is Friday. In fact, it's the last Friday of the year. And taking a recap on yesterday's trading, what we can expect from today. Oh my goodness, what a crazy market. Looking at the euro, much stronger on the top of its range, and the Aussie dollar bouncing. Now, when I'm talking about the craziness of the markets, I'm talking about the Dow Jones. Now, the day before yesterday, on Wednesday, following Christmas Day, we had probably one of the largest, biggest intraday gains in history. The stock market went over 1,000 points intraday. And yesterday, after selling off a little bit, about 6,700 points, considering, in after hours trading, all that, it's about 800 points. We tanked to about 22,200-ish level. And then we had this reversal towards the end of the day that was just unprecedented. I can never remember such a type of reversal that we even closed up higher than when we opened. Unbelievable day yesterday. We'll take a look at that in just a moment. And looking at the commodities, oil tapers off, but gold continues to rally, which may indicate that the indices will continue selling off. Now, looking at the stocks, they bounced, okay? They all bounced. However, with that said, okay, the question is whether or not they can sustain this bounce, okay? That's the telltale sign to know that we're out of a bear market or we're still in a bear market, which seems to imply that we are still in a bear market and we may continue to test those lows once again. Maybe not today, maybe not tomorrow, but that might just still happen. But let's see what we can expect from today's trading. So we're looking here at the Euro USD, and as you can see, we're at that top of that range right there, okay? We've tested these lows at 112.87-ish level, and now we're testing the highs of it of 14.58. Now, if we don't break above this 14.70, maybe break even 115, I think we'll continuing trading in this range, okay? However, as we capitulate here, I'd look for a turn of a signal, okay? Something to let me know that we are going to correct ourselves on the downside unless we do continue selling higher. Now, looking at that Aussie dollar that I was speaking about, now this downwards trend I've had and we've been following for quite some time. If we look at a 4-hour chart, we'll see that we're just testing that bottom range of it, trading at 70.52-ish level. So the game plan here is to see if we get that bounce, okay? However, if we don't get that bounce and this continues testing those lows and we continue breaking 69-ish level, then we could see ourselves maybe getting back to closer to that range and maybe correcting ourselves on the downside. So keep an eye on that as that continues to trade later today. Now, looking at that oil, we bounced to $47 a barrel just the previous day after hitting $42. Okay, this happened on Wednesday when the markets rallied, and then it tapered off. We're trading at $45.72, and we'll say, we're going to trade within this range. I don't think we're going to be breaking out of this range anytime soon. We may still test, each parameter accordingly, talking about, the upper range and the lower range, but, ultimately, things are priced in, okay? So consider that as that continues to trade. Now, looking at gold now reversing a little bit, but rallying this morning, breaking that 1278-ish resistance that we had before. We tested a couple of times, finally breaking above it. Now it's correcting itself on the downside right now, okay, as this happens in a 15-minute chart. But if we look at a 4-hour chart, you see that that's a nice rally up from our lows of 1195-ish level, 1185-ish level, where we were previously in the summer. So with that said, the markets still look, posed to continue rallying in terms of gold as this continues to trading. Now let's look at the Dow Jones. Now this thing is an animal. It's really crazy. Okay, this is 1,000-point range. Okay, we're not in 100, 200-point range. This is 1,000-point range. And we went from the beginning of the week where we sold off on Monday down to 21,500-ish level. We sold off a little bit higher than that at the end of the day. And then on following Christmas Day, on Wednesday, we rallied this 1,000 points right there. And then yesterday morning, we made this double top and we sold off. Now, this would have been actually a decent place to pick it up, a 22,470-ish level. And then it didn't really rally, didn't really sell off, and just, traded in a range, but very erratically. And we're finally taking a position on the downside. And guess what? We faked you out, okay, to 22,244. We rallied to 23,162, close to 1,000 points, which is, it's crazy. All right, this is really, really volatile. What I suggest if you do decide to trade this is to trade it smaller, because this could really hurt you in either direction. And it's usually going to hurt you if you're, sizing up or something like that and not taking money management into consideration. So we're breaking this above range. The question is whether or not we're going to sustain this 23,070-ish level, to make a further correction on the upside. If we don't sustain that rally today on the upside, I'm afraid that we may still see ourselves testing our lows. Now, if we look at the major components, the major stocks, they bounced, okay? Apple bouncing to 155, Facebook bouncing to 133 for its low was 122-ish level, Amazon bouncing to 1455 and still sustaining that. Amazon had the greatest reversal. That was really the one that had the greatest reversal. But again, we need to see some sustainable growth, some sustainable trend on upwards. Otherwise, this is still a bear market, and we may still test our lows. This is Fred Razak. I want to wish everybody a healthy and happy new year, and God bless you. Thank you so much. Bye-bye.